Welcome to the tutorial of bookkeeping mga ka-students. Before we proceed on the topic about perpetual inventory system, don't forget to like, share, and subscribe to our YouTube channel and click the notification bell for more upcoming videos. So this is the second video for perpetual inventory system. In this video, we will proceed on doing financial statements. So this is just a continuation on the first video. So if you still did not see the first one, please watch it muna before you watch this video in order for you to understand and comprehend well. So let's begin. So in the first video, the last part that I was discussing is all about the trial balance. So next step is financial statements. Now we will proceed on making income statements. As I say in the first video about perpetual, we are not required to make a statement of cost of goods sold because we already know the balance that was presented in the trial balance. So why do we still need to make an income statement? In order for us to know how much profit we earn on the month of June. So, the formula, sales 49,500 less sales returns and allowances and sales discounts. So, the total is 1,540. So, net sales is 47,960. Less cost of goods sold 30,200. So the gross profit is 17,760. Less all operating expenses with a total of 9,800. So the net profit is 7,960. So after making the financial statements, we will proceed on making an owner's equity. So, for the formula is Khrushchev capital beginning 200,000. Add net profit of 7,960 and we do not have an additional investment, so 0. So the total is 207,960 less withdrawal 5,000. Khrushchev capital end is equals to 202,960. After making the financial statement, we will proceed on making the balance sheet. In balance sheet, you see the asset, liabilities, and owner's equity. In asset and liabilities, you must separate the current and non-current in order to verify and will easily determine. In the balance sheet, the liabilities and owner's equity are combined because asset is equals to liabilities and owner's equity. So assets, the current assets are cash and cash equivalents, receivables, inventories, and prepaid expenses. This prepaid expenses is the office supplies. So the total current asset is 207,960. And the non-current assets with the property, plant, and equipment, 15,000. So the total asset is 222,960. So liabilities and owner's equity. So in the liabilities, the current liability is accounts payable with the 5,000 pesos. Non-current liability, notes payable. So 15,000 pesos. So the total liabilities is 20,000. So in owner's equity, we have Khrushchev capital end. So the total is 202,960. So the total liabilities and owner's equity is 222,960, which is the same to the total amount of the total assets. So in bookkeeping, you are required to make a statement of cash flow and determine all the activities, whether it is operating activities, investing activities, or financing activities. You can just easily do this when you will see the ledger for cash as your guide to make a cash flow. So the next step So the next step is closing entry. So closing entries are prepared at the end of the accounting period to zero out all nominal accounts in the ledger. This is done so that the transactions during the period will not commingle with the transaction in the next period. So in closing entries, all income accounts are debited and all expenses accounts are credited. So the resulting balance is recorded in a clearing account called the income summary. And the balance of income summary is close to the owner's equity or owner's capital account. So any balance in the owner's drawing account is close to the owner's capital. So note that if the income summary account has a credit balance, then there is a profit. But if the income summary account has debit balance, there is a loss. So after making closing entries, you will post it back in your ledger, and this will be the form of your ledger after posting. So you see that there has a closing entry transactions. So next is post-closing trial balance. So these accounts are the accounts that we do not close, the asset, liabilities, and owner's capital. So as you would notice, post-closing trial balance is the same as balance sheet. So the same account titles and amounts, but different style or form. So post-closing trial balance is more precise to see than balance sheet. So in overall insights, no matter what kind of inventory system you use, if it has the same problem and transaction, the ending total will always be the same. And the balance of balance sheet, financial statements, and post-closing trial balance, it will always be the same but different procedures. So that's all for this video, and thank you for watching.